Hey, you guys, this is Dr. Letitia Wright. I have a fabulous interview that has come across my desk for the month of December, right between shows, but I'm going to release this online because it's very, very important. You know that we've been talking about crowdfunding and real estate. Well, we've got the top person in that area, the best in the business, and Jilliene Helman is the CEO and the co-founder of Realty Mogul. She's responsible for all the strategic direction and operations. She was the vice president of Union Bank, and Union Bank is actually known for supporting more women's businesses than that other bank. I'll just say that other bank. And she spent time there in wealth management, finance, risk management, and she is a certified wealth strategist. She holds a Series 63 license, okay? And she has a degree in business from Georgetown University. And her organization has just passed this beautiful milestone of $10 million invested. You've been wondering about crowdfunding and real estate? Well, now we're going to get your questions answered. So welcome to the right place.
Thank you. I'm excited to be here and to share a little bit more about real estate crowdfunding.
Very good. Now, when you got into crowdfunding, was it always about real estate, or did you make a transition?
So we've been focused on real estate from the beginning. I have seen a lot of wealth built in the real estate industry throughout the entire country, and I came from a real estate family, so it was just a natural fit for me. You know, I understood the real estate markets. I love the tangible nature of real estate, and bringing that to crowdfunding has been our focus from day one.
Absolutely. It's very exciting. I love real estate, and I love crowdfunding, but a lot of people just can only see it as sort of a group investment, like a bunch of people getting together to invest on one house. And so I really want you to share with the audience a lot of the possibilities. I know you can't share everything that's there, but there's a broader opportunity than just that. So let's talk about really what crowdfunding in real estate is like right now.
Yeah, so we look to bring niche opportunities to our investor base. And as you mentioned, it's not just that single family home with the white picket fence on the corner. You know, we recently crowdfunded a retail shopping center. So this is a big acquisition. We had some really big brand name tenants in that retail shopping center. There was Safeway, CVS, Starbucks, McDonald's, and Subway, in addition to some smaller, more local tenants. But an opportunity like that, an individual investor typically does not get access to invest in at a smaller minimum dollar. So that's an example. We've also crowdfunded apartment buildings. We recently closed on a 267 unit apartment building. So great diversification. You know, you have 267 different families living in that property. And then another one that we just did was a 2,400 unit self-storage facility. So when you think about families moving, or the Army or the Marine Corps, this one happens to be near an Army base, but it gave us the opportunity to get diversification in self-storage, which is another niche asset class in the real estate industry.
Very good. Now, when you talk about minimals, what are the minimals for crowdfunding in real estate as it sits right now?
So our minimum investments are either $5,000 or $10,000, and you can contrast that to $100,000 or $250,000 in sort of the old world, pre-crowdfunding and pre the internet.
Very good. And what is also exciting is that with crowdfunding in real estate, I know that you like to focus on cash flow. So let's talk a little bit about that.
Yeah, we do. So we are strictly focused on cash flow. Every investment that we do can either pay a distribution payment the first month or the first quarter. And it's interesting, when you compare sort of real estate crowdfunding to other types of crowdfunding like startups or small businesses, you typically aren't going to see a lot of cash flow generated off those kinds of businesses. I mean, especially startups, it's very rare to get a distribution off of a startup. We're a startup ourselves. We're not paying distributions on the corporate side. But in real estate, you have rental income. So every month we collect that rental income, or we collect a payment off of a loan if we're in a debt position, and we distribute those payments back out to our investors. So cash flow is very, very important to us. We're doing distributions on a monthly basis, and I think that investors like it. You know, investors are looking for income in today's market. You've got really low interest rates in the banking environment, and we have the ability to generate income for investors literally on a monthly basis. So the cash flow focus has been a lot of fun. I love sending cash back, right? It's not all about bringing cash in, but the ability to send it back and really be an investment vehicle for these investors that are working with us.
Absolutely, because it definitely makes a difference, and it is completely different. I love that you tell people it's completely different than crowdfunding with its startup. This is very, very different, and people need to know. So what does an investor need to know before they come and work with you?
So I think that the most important thing, investor, is to do due diligence. And the first thing is you have to learn how to do due diligence. You know, there are plenty of investors who know how to do diligence in real estate, and there are other investors who are just getting their feet wet. It might be their first investment, it might be their second investment, but get educated. You know, I love doing stuff like this because this is the first step to getting educated, to finding out the resources, to figure out where you need to go. Education is such a big part of our philosophy and our culture that we actually built an education center. So we've written about 150, 175 blogs in the last year about real estate. And it's all, you know, objective information. None of it has to do with our specific transactions, but how do you do diligence on a retail transaction, a shopping center, versus due diligence on an apartment building, for example. And, you know, our investors are smart. They are smart, they are savvy, and we love that. I mean, we want investors to be educated. We don't ever want an investor in a transaction that doesn't understand the transaction. Mm-hmm. So really, I think it's get educated, and it's read, and it's absorb, and it's ask questions, and be a very diligent consumer when you're investing in anything. But, you know, even in crowdfunding, whether it's for startups or for real estate, I think my advice is the same, which is get educated, learn about it, don't be afraid to ask questions. And also vet the companies that you're working with. You know, we have an open door policy. So you can email us at any time. Our email is info@realtymogul.com, and we plaster it all over our website. Investors can call us at any time. And we love talking to investors. We love, you know, explaining to them the difference between an apartment building and a retail shopping center. And we don't provide investment advice. So everyone has, you know, a unique situation. They need to work with their attorneys and their CPAs and their financial advisors. We're not financial advisors, but what we do provide is just objective advice on what is real estate investing, what are some of the benefits, what are the risks. You know, there's always risks, and so for us, it's education really is the most important thing for an investor to get started.
Very good. Now, with real estate investing, are you also investing in any loans and that kind of thing? Do you have that secondary market going on?
We do. So we are investing in mortgages.
Mm-hmm.
The majority of our mortgages are actually for single family properties that are being renovated. So we'll work with professional real estate companies who do fixer-uppers. So they'll fix a property and then look to resell it, like fix and flip is sometimes what it's called in the industry. So we'll write short-term loans for those types of investors. They're usually 1 year or 2 year. We've also done a hotel loan where we're the lender on a hotel right now. We've done an apartment loan where we're the lender on an apartment building. So we really strive for diversification for our investors. Allow them to invest in a variety of different real estate, either in equity or on the debt side with the mortgage.
Do you find that clients are having a little bit of a challenge finding their tax professionals who are knowledgeable enough about crowdfunding?
About crowdfunding, definitely. Okay. You know, it's so new that there are certain people who are specializing in it, right? You see law firms now saying we're going to be specialists in crowdfunding in that niche, and you're going to see the same thing in the CPA and the tax accounting world. But at the same time, albeit they are not specialists in crowdfunding, we structure our transactions as private placements. Okay. And a lot of your accounting professionals have experience in private placements.
Got it.
So they understand the liquidity of that. They understand the tax implications. In real estate specifically, with our equity investments, we offer pass-through depreciation, which means that an investor's tax liability should go down, right? Especially an investor in a high tax bracket. And most of your tax professionals, you know, understand depreciation and how to write that off. It's usually passed through on a K-1 at tax time. So, you know, they're familiar with it, but if you ask, you know, your average accountant if they're familiar with crowdfunding, you probably get a blank stare still, which I think will change as we go on.
Okay, very good. Yeah, I think that too. Right now, people are really, what are my tax consequences? And, of course, for a small business, it is completely different, so you guys know what I teach about that. It's completely different. That's why we have her here to explain to you about real estate. We're talking with Jilliene Helman, and she is the head of Realty Mogul, and we're talking about crowdfunding specific to real estate. what are the projections for how much money is going to be made in your niche in 2014?
Yeah, so this year in 2013, our company did about $10 million. The industry is much, much larger than $10 million. I mean, let's just think about real estate from a macro perspective. Real estate is a $17 trillion market in the United States, right? So this is massive. I mean, it's a huge, huge part of our economy. I think that crowdfunding has the ability to be in the hundreds of billions of dollars. Okay. So it's not going to happen overnight, but I think that the amount of capital that could go into crowdfunding is probably something like $150 billion in real estate. And you look at the market for REITs, right? So real estate investment trusts, which are not crowdfunding, they're not direct private placements, but there's some parallels between, what we do and what the REITs do. And REITs in 2012 were $600 billion. So it's just this massive, massive industry. And again, it won't happen overnight, but, hopefully we'll do a larger volume next year. Our methodology has always been, we want to do a lot of real estate. We want to give investors the opportunity to invest in a lot of diverse types of real estate, but we don't want to do deals that don't make sense. We don't want to be in economies where you've got population decline or you've got, an economic downturn. I mean, there's a lot of things to be careful with in real estate. It's a cyclical business. So we don't map ourselves back to a dollar number. We map ourselves back to opportunity. How much opportunity do we think there's going to be in a given year? But really, I think crowdfunding for real estate is going to be huge. I mean, I think you're looking at hundreds of billions of dollars.
Okay. Are you just looking at properties that are U.S. based, or are you worldwide? Are you guys open to worldwide situations?
So we're just looking at properties in the United States, though we have select investors in foreign markets. So it depends a lot of times on the legality and the regulation in other markets, but there are some countries that work really well with the U.S. and have tax treaties with the U.S. And in those countries, we can have investors from those foreign countries, but we're always investing here in the U.S. real estate. Okay,
I think that's really important because a lot of the companies that are doing real estate that I get notices from are, in other countries. And so, people look at, is our money leaving and going somewhere else? We're USA. I know I have a lot of viewers from all over the world, but USA is really trying to build itself back up. And so I know that that's an important point. I just wanted to bring that out. So let's go back to the REITs, the REITs, and how it's different from crowdfunding. I think a lot of people think when we talk about crowdfunding and real estate, that's what we're talking about. So I'd like you to just go into a little bit more depth just to explain to our audience.
Sure. So I think that there's two major differences between crowdfunding for real estate and REITs or REITs. The first one is control. So when you're investing with a REIT, you are buying into a pool of assets. There could be 1,000, 2,000, 5,000 real properties in there. So 5,000 apartments, it could be 5,000 mortgages. You cannot control the actual properties that you own. With our model, you can say, I want to own that shopping center, or that apartment building, that self-storage property. Maybe you only want to invest in California, you only want to invest in Texas or New York or some specific market. So we give you a lot more control to pick the exact asset that you own. And I think there's a deeper sense of ownership. There's that deeper sense of pride and ownership that, you're driving by that building and you go, I own that building, as you're looking up at it, which you really don't get in a REIT. So number one is control. Number two is transparency. And these things are very interrelated, but again, in a REIT, you don't know what you own. You don't know how each specific property is performing. So you know on a macro level, right, these 5,000 properties are kicking off a 7% dividend or an 8% dividend or whatever it may be, but you don't actually know how each one of those properties are performing. So we provide investor dashboards. And on those investor dashboards, investors have, 24/7 access to see how their money is working for them. They can see how that individual property is performing. They get quarterly financials on that specific asset or that pool of assets. And that's very different than the reporting that comes out of a REIT and sort of your ability to be transparent around how you're investing. So really, control and transparency, I think, are the big differences between investing in a REIT and investing in crowdfunding for real estate.
That's very, 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 very important and very, very exciting. And I think the fact that you guys offer a dashboard is really attractive to investors because they feel like everybody says you can call us, but you know, when you have something broken, then you try to call the company. It's a different situation. But with your dashboard, people are able to see specifically what it is they're looking for, and then they can call for extra explanation if they don't get it. And so I think that's really important. Your company does have a very good reputation in the community as being very connected to the community. And I do like the point that you brought up that, you know, people feel connected. Crowdfunding is about creating a connection, and you are able to take that into the real estate area, which people wouldn't think they would get. They feel that on a business, but you're able to make that happen with the real estate because you said specifically, hey, I can say, hey, I'm in LA, I want to invest in LA. So I really, really appreciate that. So that's really great. I really thank you for being on the show and sharing. Tell us how they can get in touch with the company. They don't have to talk to you specifically. They can actually invest by just getting in touch with the company. She does have other people that work there. And then I'd love to have you come back in a few months and speak with me again and just give us updates on where the real estate is in 2014, because I think it's going to be extremely exciting. I can't wait to get, clients that are interested in that so I can share with them all this great stuff. So tell us how to get in touch with Realty Mogul.
Certainly. So our website is www.realtymogul.com, and that's REALTYMOGUL.com. And you can always email us at info@realtymogul.com. I'm also always available. You know, one of my favorite parts about this job is talking to investors. You know, they're excited, we're excited. So you can reach out to me directly. I'm hopefully very accessible. But yeah, feel free to email us. Feel free to go online at realtymogul.com. And we look forward to supporting more investors in the new year.
Very good. Thank you so much for joining me. Thank you guys for watching. I hope you really review this video again, take in the information. If you've been wanting to invest in real estate and you've been wanting to do it under the crowdfunding banner, there's a whole new ballgame out there. There's so much great stuff for you to learn. Take advantage of it and start slow, but get it rolling. Thank you so much for joining. Remember what I say, everybody? Ignoring one's conscience is neither safe nor right. I'll see you next time.